Speaking of holding those responsible to account, in your mind, did the federal government, and I mean the Biden administration, President Biden, move quickly enough in the days after this collapse? Because I'm hearing a lot of grumblings, at least in my part of the world, that the Americans just didn't have the speed that they needed to reassure the market, and that's why we've seen such a significant contagion feeling, if you will, over the last several weeks.
Completely not. No, I've got confidence in I've got confidence in what they did. I think the issue here is what the Fed did not do and what the powers were that were given to the Fed to disable them, or so to speak, or prevent them from making a proper intervention. My view is I watched what happened. I saw them act quickly. There are many examples of acting quickly. The issue today, I think as you rightly point out, is not only how fast can people put money in, but how quickly could people pull money out. I don't see this as having great systemic risk, but what I think is very strong messages need to be sent to ring fence and prevent systemic risk and contagion, not for what I call cross defaults, but for a confidence issue. In my view, I've got confidence in the brokerage industry, but I'm not sure about confidence in the banking industry. So yes, I'm happy with what they did. Yes, I think they did the right thing. They attempted to do everything they could, but people talk. Things get magnified and expanded out of control. And the most important thing will be, what is the Fed doing now to identify other institutions and other entities that are having similar problems, and what will they do going in to make sure that these firms are correctly marking to market positions and taking steps so that if they do get runs, they can ring fence and control.
Correct. So, Mark, what is the number one thing that lawmakers can do to strengthen the banking system and ensure financial stability moving forward, in your view?
Regulate banks in the provision of credit. Bring back Glass-Steagall. Put in place tough bank regulation and change the structure of what we call bank solvency capital to resemble more of what broker-dealers have, which is net capital. There's always been lax bank regulation. There's always been soft hands given to banks and the Fed and the control of the currency. And particularly in this day and age, when it's so easy to move vast amounts of money so quickly, we need stronger controls. We don't need any dilution of what happened with Dodd-Frank. In fact, we need the opposite. We need much tougher legislation, much tougher regulation, and we need intervention when it's needed. February 2021, when the Fed first saw it, they should have been intervening then, not waiting.